What's going on, you guys? Welcome to Risky Ryan Trades. Today we're going to be talking about Zeta, the technology marketing company. You may have heard a little bit about this. You may have seen some posts. Here, let's zoom in on this just a little bit. People saying that it's the next Oscar, the next Palantir, and the setup does look pretty similar to what we've seen from these four stocks. And I kind of missed out on Oscar, kind of didn't. I chose not to buy Oscar, not because of the financials. Financials are fine. Part of my problem is I don't invest in a company unless I like the CEO. I like to be able to trust the management team. That's why I don't invest in Robinhood, and it's why I don't invest in Oscar. You might be surprised that I don't trust the management team on Robinhood because they execute so much. But my problem is I just don't trust them because of the way that they halted trading, shut down accounts. It's just, I don't know. Something's up there. And I'm just the type of person, if you lose my trust, you kind of lose it forever. So it would take a lot of convincing to convince me to come aboard the Robinhood boat. Great business, great chart, but that's not what we're here to talk about. We're here to talk about Zeta. Is Zeta the next one? So this is what the chart is looking like at the moment. And actually, I'll pull up my chart in a second here, but I just wanted to show you the market symmetry. So this is how I have my GAN set. You can see how this arc lines up with this first pullback. So, and then it bounces off this GAN angle, comes all the way up to this GAN angle, and then comes back down to this GAN angle. I have a feeling that price action is going to live within these two GAN angles for some period of time. I'm waiting for confirmation. So here, let's go to my other, my main chart. Now, before I dive into the numbers, I want you to take a look at my indicators below. You can see the MACD from this high has been slowly trying to make it down below the zero line. And if you know anything about the MACD, your signal happens when you have a MACD crossover under the zero line. And that has occurred. And this is on a weekly, these are weekly candles you're looking at here. And so what we have here is a MACD crossover. That usually indicates the beginning of a trend. So cheers to anyone who's been following this and bought it right here. But right now we have what appears to be confirmation of the move higher. Also, on the RSI, on the weekly, we are trying to make it over the 50 line, which is a good indicator that we're picking up strength. Now, this, hang on one sec. I think I messed up my, here, I gotta lock this down. All right, lock. There we go. Okay. Now, we closed the week underneath this GAN angle, and this is the issue that I have with the current technical setup. Are we probably going to hold this support level down here at $13.16? Probably we are. I think we probably will. And especially after you have this like bullish engulfing and then bearish engulfing and then bullish engulfing. It's like a bullish reversal attack or whatever you call this. So probably we're going to continue higher. Probably everything is saying that we continue higher. There's just a couple issues that I have. Number one, if you go into the daily, see this gap up? We capped up, but we couldn't get into the arc. We did close above this GAN. And we wicked through this Fibonacci, but we left a huge gap right here. Could this gap fill? I think it probably will. Let's take a look at the MACD. The MACD on the daily looks pretty good here as well. Maybe the gap won't fill. I don't know. But what I am looking for, this is what I am looking for. Number one, I have to sniff out the CEOs. One of them is a CEO, former CEO of Apple, which is a good sign. I have to make sure I trust them. So that's part of my checklist. Number two, I want to see price action close above this Fibonacci level on the weekly. Everything else, as we're going to go over here, because we're going to talk about their financials, just who they are, what they are, and why we should invest in them. Everything else seems pretty good. I kind of like it. So let's dive back into some more of the information about this company itself. So who are they? What is Zeta? Zeta Global Holdings is a data-driven, AI-powered marketing cloud company. Primary product is Zeta Marketing Platform, and it integrates identity, intelligence, and omni-channel activation. It helps brands acquire, grow, and retain customers. This is important. It gets their names out there. It's a marketing platform. They were founded in 2007, so they've been around a very long time, and they survived the 2008 financial crisis right after they were born, which means that, they got to be tough and built to last. And they were founded by David Steinberg and John Sculley, a former Apple CEO. They IPO'd in 2021 at a $1.7 billion valuation, and they're one of the largest proprietary identity graphs, 2.4 billion profiles, enables hyper-personalized marketing at scale. So let's dive into the financials here. So actually here, before we do that and get that, I want to go to weekly here and show you kind of what I have seen. So you can see all these little earnings, these E's down here. If you have TradingView, those are your earnings. I went through them all. Even the red ones, they surprise on revenue. They always beat and raise on revenue, beat and raise, but their earnings don't always beat, don't always raise. And they are currently not GAAP profitable. So they are not profitable yet. They have had a quarter of profitability. So this is a pre-profitable company. Keep that in mind. This is risky, even for me. But if you have a company that you think will become profitable and you invest before they're profitable, you buy before the rocket ship takes off. So that's the benefit of it. Now let's take a look at their annual earnings. I'm going to get rid of their forecast here just so we can see. So it's trending up, and their earnings in 2024 were actually positive. And then revenue has been growing, and it saw a really big increase in 2024. 2025 estimate is a 25% growth in revenue. I think I have a couple other things in here. So, okay, yeah. So Zeta's Edge, 90% recurring revenue from long-term customers. So they have annually recurring revenue, which is the gold standard in business these days. They have $366 million in cash. I got to imagine it's a pretty asset-light company as well. Their dilution and stock-based compensation is going down, which is a good thing if you are an investor in this company. They have high year-over-year growth, margin expansion. They also are a strong buyer, outperformed by most analysts, with a $15 to $44 price target. And as we can see, their price currently is $14.18. So that's a good thing. Some risks. They're not GAAP profitable yet. Their operating expenses is 72% of revenue. That's really high, but I guess that gives you a lot of room to improve as well. Their competition is Salesforce, Adobe, and Oracle. Not really people you want to have as competition. And there's a question if they can grow without acquisitions, because for such a small company, they do have a lot of acquisitions. The bull case for Zeta: AI adoption drives enterprise stickiness, ZMP scalability, and unified design make it attractive to large enterprises, especially as AI becomes central to marketing. Margins expand with scale. As revenue rises, operating leverage should kick in, improving EBITDA and potentially flipping to GAAP profitability. Regulatory wins could create a moat. Demonstrating compliance and governance could be a differentiator as data privacy laws tighten, making Zeta a more trustworthy partner. Strategic partnerships and mergers and acquisitions, potential alliances, or being an acquisition target by a larger cloud or CRM company. So potentially Oracle, Salesforce or Adobe could purchase and buy Zeta, which usually pays you a lot. Bear case, marketing budget cuts impact demand. A macroeconomic downturn or continued cost cutting by enterprises could depress marketing spend and hurt Zeta's top line. Competitive pricing pressures, larger rivals may and I don't agree with this because you could see their top line is just growing, and it's grown since 2021, and we have experienced quite a few different market macroeconomic environments throughout that time, like probably like 3 or 4 different macroeconomic environments compressed into 4 years, types of environments that would take 3 years to play out, compressed into those 3 years. So I think they're strong. They're strong enough to overcome that first bear case. I don't know if I agree with it. Competitive pricing pressures. Larger rivals may undercut on pricing or bundle services, forcing Zeta to reduce prices or lose deals. This one I'm a little worried about. But, keep an eye out for it, I guess, if you do choose to invest in this company. But people always say this, like, oh, Amazon's going to come after Hims or Home Depot or these other things, and it just never happens. So that's maybe. Persistent gap losses. This one's big. If profitability keeps getting delayed, investor patience could wear thin, and there could be a valuation compression. People could just throw it to the side if this doesn't play out. So regulatory changes disrupt model. New laws or enforcement actions could force Zeta to alter or abandon key aspects of its identity data strategy. I don't see there being stricter regulations under Trump. I would say this persistent gap losses, this could be the thing that does it in. But right now, there's a lot of traders and investors looking at the technical setup, and they're willing to ride out probably a quarter or two, regardless of what happens. Final thoughts. Proven growth engine and picking up momentum. Absolutely. Good fit for growth-oriented investors with high risk tolerance, especially those comfortable with unprofitable but scaling tech firms that could pivot to profitability within a year or two. That pretty much sums it up. It's a high risk play, but it seems promising for sure. The technical setup looks really nice. Stop losses are recommended. Something that you have to keep an eye on. Good for a swing trade. Maybe not something I want to be in long term. I'll continue to do my due diligence, but there seem to be some potential problems or obstacles with competition or things like that. Potentially down the road, and something that'll come to a head, I think, after a year or so. But hopefully the big move in price could take place. You could take some profits and then go from there. So that's it. That's my summary of Zeta. Hopefully you got a lot of value in that, packed a lot of information in a short amount of time. So if you liked the video, got some value out of it, please hit that like button. It helps me grow my channel. Hit the subscribe button if you'd like to see some more of these. And then comment below, will you be buying Zeta? And what are your thoughts about the company? And are there any other companies that you'd like me to take a look at? Thank you so much. And until next time, Risky Ryan out.